All right, welcome back. Today we're going to talk about making your dreams your reality. As we know, planning for your future requires knowing where you are right now, and there's a tool that can really be cool and fun to use in order to determine what that is and access your current financial situation. That is called the balance sheet. That is going to be a resource that you can use today and then continue to use throughout your lifetime, and it'll be a very valuable asset in that way. It's a balance sheet, a personal balance sheet is very personal to you, and it's basically a snapshot and a picture of your financial situation on a particular day, like today at 12 o'clock. It's going to be an example of where you are in terms of how much you owe and then how much you own. What we like to do is do the personal balance sheet at least once a year, sometimes twice a year, if you want to get the motivation in the middle of the year to continue to strive for your goals. Over time, we'll go ahead and we'll look at it and then calculate our net worth. Sometimes a personal balance sheet is called a net worth statement. So what do we mean by net worth statements? Your net worth is really your assets. Assets are everything you own in life, minus your liabilities, which might be everything you owe other people. When we subtract out your liabilities from your assets, then what we have left is your net worth. So obviously, we want to see that your net worth is always continuously growing over time. What we should accomplish today is we're going to learn about your net worth and what creates that value. And then we're going to find out where all the items that create our personal net worth come from. We will learn about and implement setting the goals and then get started on writing our goals and setting those real expectations for ourselves. So let's jump right in and look at this more closely. What are assets? As we already told you, on the left hand of your screen over here, you'll see that balance sheet is the snapshot visual of your financial situation at a specific time. It examines what you own and what you owe to the world. So here in the middle is our net worth, and we'll show you exactly what that is. So everything you own minus everything you owe equals your net worth, which should grow over time, as I just stated. So what are assets? We want to look at assets as different categories. So we have assets are monetary assets, tangible assets, and our investment assets. Then we have our liabilities, which are current bills, and then we have long-term loans, and those are both considered liabilities. So the first category of assets we might call monetary assets. Those things are really practically cash, okay? They're already cash, or they can be exchanged for cash very easily, and we like to call that liquid assets if you're in accounting by any chance. This can be your checking and savings account balances, or maybe your friend owes you some money. You can walk up to her and get that cash. Those type of things are very liquid and ready to go. Tangible assets. Those things are things that you can put your hands on and hold, actually. Personal property such as your vehicle, a car or a bike or a boat, your furniture in your home. Maybe you have a computer, some clothing, if you own a home. Tools, musical instruments, really other things that sort of cost a lot of money, or big ticket items is what we like to call them. These things are always going to be priced at market value. So whenever you're adding up all of your tangible assets, you want to look at market value, which is what can this item be sold for right now, not what you purchased it for, or not how much you want to get out of it, but how much is it worth, okay? All right, so on to investments. This is the last category. And Our investment assets are typically things that are interest bearing. They are going to be the things like stocks, bonds, mutual funds, sometimes even real estate or land property. We have in this category our retirement accounts, employer sponsored retirement accounts, and also life insurance. But really, only the cash value of it. It's not going to be what they pay out to you after you're deceased. So, what you could pull out of it. Now we're done with our assets. Now let's move on with the next portion of our calculation here, liabilities. So everything you owe. The first section is current bills. And I would like to say, as far as current bills go, anything that you need to pay on a monthly basis that's due immediately. Those are going to be your current bills. Anything that if you were to pay the bill late or try to extend the bill, they're going to cut you off or charge you a lot of money for not making that payment, or you're going to lose something that's valuable to you because you didn't make that payment. That is going to be a current liability. Some examples of this is going to be credit cards. Usually you have to pay your credit card bill within the 30 days, or else you're going to gain some interest and have to pay even more on those funds that you borrowed. Also here we have account balances. Maybe you have an account with one of your favorite stores and you have a balance that you need to pay off. You put things in layaway. You need to go get them. Those are current bills. Even personal bills with other people. So maybe you borrowed some money from a friend or a family member and you have never paid them back. That's a bill that you need to get paid immediately. And also your utilities. You've used up some utilities, you haven't paid your bill. So that is a current bill. And you'll need to get that paid, or else, again, it'll get shut off or you'll lose your utilities. There are still current bills that maybe you haven't got around to paying it. Your phone bill, maybe you have a computer that's getting fixed on and they need their payments. Just think about all the bills that you have. Those are your current bills, okay? Anything that necessarily needs to be paid immediately to get your equipment, services, whatever you need back. All right, so next we have our long-term loans. Our long-term loans are going to be our college loans or student loans for education, your home mortgages, or other real estate type mortgages. And these types of liabilities can really add up. They're the things that we pay over a long time, usually over 10 years or over 1 year, 12 months even. It can be considered as a long-term loan. So you definitely want to get that paid. Your education expenses, that is also included in your long-term loans. So whenever you put these amounts on your balance sheet, however, just make sure when you're putting down the long-term loan that you're using the current value of the debt, not the future value of the debt. So if you're borrowing $800 today and you borrowed it today, your value is going to be $800, not the $1,600 you're going to pay when you finally pay off the entire loan. Okay? Those are the things that create your net worth. So your assets and your liabilities. And you have your net worth. So let's go ahead and dig into an example. Let's say for an example that you went out and you borrowed $5,000 from your friend. You had a student loan of $35,000. And you have some health bills for $7,500. and a credit card bill for $8,600. Your total liabilities are $56,100. You had about $500 in your pocket, $2,000 in your checking account, and $1,650 in your savings account. You also had a car that was worth $15,000, which is significant. You have a piano that's worth $2,000, and then you have clothing, about $1,200 worth of saleable clothing, some furniture for $5,000, a computer that you've owned for the past 3 years, but it's still worth $700, a cell phone that you've had a little under a year and it's worth $350, and a motorcycle that you could sell today for $12,000. So your assets are $47,057. If we take the $47,000 in assets, subtract the $56,000 that we owe, we have a negative $9,000 of net worth. Reflecting on our individual assets and liabilities here, we can just assume that the person we're talking about is Mr. Cashflow. And so in this case, Cashflow, or let's say Cashflow Jr., because I mean, based on the accounts that we have, he's going to be a student, probably just starting out, just looking into his finances, and he wants to get that on track. So Cashflow Jr., what we see here is that it's not unusual for somebody in his position at his life stage to have a negative net worth. What we really do see often, that when people start out as young adults and then they're just starting to work, or they haven't worked very long, or never had a full-time job, they'll have a negative net worth. That's not necessarily a big problem at that stage. But obviously, we want to see that change over their lifetime, and then see that the net worth increases, and so thus their net worth also. We're going to look at a graph because it's actually kind of a life cycle on net worth and how that works. When we look at the graph, you'll see that the graph shows that the median value of assets for households by each age. And then you'll be able to see that people's net worth tend to start out pretty low, and then they'll increase as their career progresses or they make more money. All right, and so here you go is the graph, and we have the lowest value at age 35. Most people under 35 are not being very responsible with their funds. We do have a good 1% that are. However, they're going to have 0 to negative net worths. As they start to grow around 35, they start getting into their careers, and the net worth will start to grow and pan off once they get to retirement. Typically, people make more money, and then they have salary increases. So as they get more experience, it'll grow, the net worth will grow, and probably then they'll retire. So what happens when they retire? We start using that money and that we've accumulated, and then the curve will start to go back down. That's the typical life cycle stage that you would see. Now, obviously, other things can affect net worth. Things like medical costs that are large, or assisting children with college costs, unemployment. All those things can impact net worth. But this is just sort of the curve that we may anticipate. So remember, calculating your net worth annually is a strategic financial tool that you'll be able to use where you're now to measure your progress over time. And that can be very helpful as we go forward with your financial planning. All right. On that note, let's go ahead and get into your dreams and turning those into goals and what we need to do with the information that we just revealed about our net worth. So think about the information that we just went over and think about your assets and your liabilities and the number that you came out with. Now, decide for a moment exactly where you would like that number to be instead of what you just saw. So how do we get there? What we need to do to get there is turn your dreams into a goal. And so say you were a negative $9,000 and just as a small short-term goal, you wanted to make that negative $9,000 to a positive $9,000 just to cut it even. Well, or we have, as you see on our screen, you want to save at least $5,000. My suggestion would be before you can get to $5,000, you want to get that negative out of there. So obviously your first goal is going to be save $9,000. So you're at a zero net worth. And once you're at zero net worth, now you can push yourself forward and make better decisions going forward. So after you get to zero net worth, now you're able to save that $5,000 to put into an emergency fund within the next 12 months. In order to do that, you're going to have to make a SMART goal. The goal needs to be specific, such as $5,000, measurable, which is within 12 months. You agree on it with your family members, and it's realistic. If you're not even pulling at least, let's say, $20,000 a year in income, and that's very low for an example, possibly you're not, with liabilities and bills included, you're not going to be able to save $5,000 for that year unless you're picking up an extra job. So you want to make sure the goal is realistic, because otherwise you're going to be beating yourself up because you can't make that goal, or you're going to relapse and end up going to the mall and buying up everything because you felt like, well, what the heck, I can't do this anyway. Lastly, your goal needs to be timed, and it also correlates with the 12 months. But you may want to even break that down with each month. So within 30 days, how much do you need to make? So you would break the $5,000 into 12 months, and that'll give you how much each month you need to raise, kind of giving yourself a motivation to gain the funds that you need within that specific time. As a recap, you just want to make sure that your goal is totally realistic. You want to break it down. $5,000 within 12 months, $417 per month, $104 per week, or $14.88 per day. Then take a look at your checkbook and say, hey, am I bringing this much income in for these time slots, and can I realistically pay them? So take a look at your assets, take a look at your bills, and say, after my liabilities are paid, do I have at least $14 per day to put aside? Do I have that $104 per week? Or can I even afford $417 extra per month? But simply put, looking at the per day values is going to help you a lot, because when an individual looks at $14.88 a day, they might say, hey, I do have $20 in my pocket, so I can put that $14 in my savings account before going to McDonald's with a friend and just blowing it. So you may realistically have the money, but you don't see it because you're looking too much at the larger sums than the small sums that'll make that up. Usually we don't even think about it. We just think that we have to have $417 at one time. That's not technically true. You can make find a way to make $14.88 per day and allow that to be and go directly towards the savings that you're trying to plan out. So we'll look at another example here. We want to break the amounts down per week and per day to make it manageable to something your mind can mentally grasp today, and not just the total ultimate dream that you have in mind for the future. Paying off college loans is something that a lot of young adults are looking at, typically in the United States. 10 years is a very common number for how long it takes you to pay those off. So let's say that somebody had $27,870 that they owed, and that included interest and everything, or charges that they may have as well. It would cost them about $232 a month or $52 a week to pay that off in 10 years. Somebody might look at that and say, wow, $52 a week, I could actually do more than that. And in essence, what they would be doing is getting that principal paid down faster, which is the interest on the loan. So I really do think that it helps to write out goals so that they're specific, they're smart, and they check if they're realistic. You'll put a date on them, divide it out, and see if that's something that you can do. Writing your financial goals doesn't always have to be a dollar amount either. Sometimes it's a test that just helps you move toward understanding your finances or looking at and exploring different options. But you might want to add them to your financial list. So for example, calculating your net worth may be something that you want to do. And again, having that deadline can help you achieve it. So writing financial goals can really give you a direction in your money management and in your life, and then help you get towards the things that you want. Those are sort of like roadmaps that you can refer to over time. I'm going to suggest that you begin to keep a running list of your financial goals, both short-term and long-term, and see that how that's going to help you out. On a monthly or quarterly basis, you and your spouse, if you have one, should review your progress and continue to refine your plan. If you're not meeting your goals, you're going to need to revisit your financial budget to see if there are any areas where you can cut expenses in order to free up money for savings. In addition, you're going to use that plan to allocate any windfall amounts you may receive from bonuses, inheritances, tax refunds, or anything else. To help simplify the financial goal setting process, you can use our goal worksheet. All right, now we can go over the most important and fun part of the module, our homework. So don't get into a fret if you have fear over homework. But basically all that means is the hands-on section of the module. Now you get to do the things that we're talking about, which is very important, because if you don't get started, then you'll never get on to your dreams. So the very first thing that we want to do is gather all of your documents that will make up personal liabilities and assets. Then set those documents inside a folder or make copies and put them all in one place for the next session. We're going to get things like your credit report, your bank statements, your house inventory, your large items, receipts, everything you could possibly think of that you would need for like an insurance claim, okay? Absolutely everything. This is going to be very important for you to get this now, because when we work on our next module, we're going to use those things, and you're going to be very grateful that you got everything in an organized manner early. The next thing you want to do is create a realistic financial goals list. Write down all the goals that you can think of and wish to accomplish from now until the next 5 years. Then you're going to organize those in the order of importance to you. Which one do you want to do first, and which one is least important, but you would like for that to get done? Obviously, they're going to be in order. So you want to put the ones that you want to accomplish this year first, and then you want to put longer term goals last, which meaning within 5 years. So don't take more than 3 minutes for each goal, because after 3 minutes, you're just pondering and making stuff up. So we don't want to make stuff up. We want to come things that really are close to our heart. And usually those things that are close to our heart are really easy to put down on paper. The third thing is begin tracking your expenses over 3 to 7 days using daily expense worksheet. That's very important. And I have a daily expense worksheet for you. I'll show you right now. So this is our cash flow cake daily expense worksheet. And what you want to do with this is put in the date. The starting date goes here. The end date goes here. Then on here, over on the side, you'll see Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday. And then you have a total bar. This is where you're going to put the dates. So the 1st, the 2nd, the 3rd, the 4th, the 5th, the 6th, the 7th. After you do that, for each day, you're going to tally up all of the money that you spent for each section. Now, there's not a section on here. Just put the cost of whatever it was inside the section that closely resembles it. So sometimes you're going to have solid monthly expenses, and then you'll have variable expenses as well. So your consistent expenses, say for instance your phone bill is due and you only pay that once, so you're not going to be paying that on Monday, Tuesday, Wednesday, Thursday, and Friday, and you're definitely not going to pay it again after this week. So you just want to put that on any of the days, or just choose the day that you actually paid it and write that down. Then when you go into the utility office to pay your bill, say you went in on Friday, then you'll just go down to Friday and put the $800 or whatever utility bill is down. And I really hope the utility bill is not $800. I was just using that as an example. And then throughout the week, you have your variable expenses like food and childcare, household costs, or entertainment. Just on each day, you're going to put the total amount in the box. So what I recommend is that at the end of the day, you actually get these things together. Take all of your receipts and jot these down that way. But make sure you don't forget. If you want to put each expense as you go, I mean, you can do that and then put a barrel on. It's all up to you what you do, but just make it fun, and then make sure you get the expenses into each category as reasonable as possible. So this is the daily expense sheet. And then once you're done with this daily expense sheet, we'll have some other things that you'll be working on soon. So this is our cash flow cake workbook. It's an entire workbook that I put together, and after everything is all said and done, you'll be completing this workbook as best as you can. So it has some questions, it has some modules, some pictures in here that you want to review, and then after we're done, we're going to be using our budget that I just showed you to put everything in place. Okay, now we have that done. What should you know? So now you should know that what your real goals and what it will take to accomplish them. You will know how to find your net worth after this module. And also after this module, you should start discovering possible financial habits using that daily sheet that we had. So I look forward to seeing you all on the next module. And thank you so much for spending this time with me.